Hello and welcome back to the Satoshi Society YouTube channel. Obviously, the Fed meeting is going on right now, and we are seeing lots and lots of volatility. I have just come on here and jumped on quickly for you. If I can share my screen, for some reason, let me just go into my settings quickly. For some reason, my computer doesn't always like to share my screen. Let me just share that for you. Give it access. There we go. Right, so hopefully that'll work now. Share screen. There we go. There we go. So as you can see, we are seeing lots and lots of volatility with Bitcoin right now, and I'm sure we are seeing that with a lot of these crypto coins as well. So yeah, I'm not 100% sure what the Fed rate hike is yet, because for some reason it's not loading. It keeps coming up with this for me. Where is it? Here we go. This page is not working. So I'm not too sure what it is yet. I'm trying to reload the page. But yeah, it's not working for me. So if you are looking at it on a different website, which I'm unaware of, please let me know in the comment section, because I am unsure. But earlier on today, I was looking at this. I know the chart looks very clustered right now, but it's all very useful information. But earlier on today, I was looking at this potential symmetrical triangle pattern here, and I was waiting for the breakout, but the breakout did actually come when the Fed meeting started. So I just completely scrapped this symmetrical triangle, because obviously, as you can see right now, we are seeing this symmetrical triangle be completely unrespected. So yeah, I'm going to get rid of this, and we don't really need to look at that anymore. If it wasn't if the Fed meeting wasn't going on, I'm pretty sure it would be a pretty good either short or long trade, depending on whichever side it broke towards the upside or the downside of. But yeah, as of right now, we are seeing a lot of volatility. Let me see if I can see if they've come out with it yet. For some reason, the website is just not working. This is really annoying. Come on. I think so many people are using the website. So many people are trying to reload it that that it's not working. But you know, I'm pretty sure it's a 75 basis point. I think that was pretty certain on what it was going to be. You know, 83% chance. Well, 83% of the people thought it was going to be a 75 basis point hike. So I would not be surprised if it wasn't that. As we can see on the chart right here, we are seeing a lot of volatility. Now we are seeing a big push towards the downside. We were getting we came to that 75. Thank you very much. Yeah, as I said, my this one's loaded now. Okay, yeah, 75. This one still seems to not want to load. 75, great. Yeah, so 75 basis points. We are seeing a pretty bearish reaction to that. As we can see, came up to 20,000 after breaking out of that symmetrical triangle that I spoke to you about, but we are seeing a negative reaction now, coming all the way back down to around 19,000 and dipping below 19,000 as well. So what does this mean? Well, if we're getting this negative reaction to that 75 basis point rate hike, then we are most likely going to see a much bigger correction than this as well. So looking at, let's have a look at this chart here. So yeah, if we do continue to, is that going to be, for me, yes. For 75 basis point, it's really, it's a hard one, okay? Ben mentioned this as well. It was either going to be 100 basis points, and the market would most definitely from that. And then if it was below 75, then the market would have pumped. But 75, you know, is a bit, what's the market going to do? But because the market is having a negative reaction to it, meaning that people are selling off of the basis of that 75 basis points rate hike, it looks like we could see a even bigger correction. Now, what does that mean? Well, that means we're going to break this major support level here on the daily chart. Now, of course, I'll get into the DXY in a second, Charlie, for you. But yeah, what it means is that if we break this major support on the daily, we are most likely going to see those much lower price targets. As you can see, it's been major support. And today we were actually holding this support really nicely and potentially getting that bounce because we did come up to 20,000. We were getting that nice bounce. But after this 75 basis point rate hike, we are seeing a negative reaction. So the likelihood of it is that we could see the price break towards the downside potentially today if we do continue to see this negative reaction. As you can see, it's been major support previously. And if we do break this, we could see a pretty big push towards the downside. If you keep knocking on the door, soon enough, the door is going to open. And we keep knocking on the door of this $19,000 level. And we keep trying to break below it. And as of yet, we haven't. But if we do continue to get a negative reaction to this rate hike, then we are most likely going to break towards the downside, potentially even today as well. Looking at the DXY quickly, the DXY, I did post this on Twitter. So if you don't follow us on Twitter, make sure you follow us on Twitter. Link is in the description. But the DXY is actually pumping off of this as well. We are seeing the price of the DXY push. Earlier on today, it was sat around 110, but we are seeing it push to around 111.5. And of course, if we see the DXY continue to push, we are most definitely going to see the traditional market and the crypto markets dump. Taking a quick look at the traditional markets. Now, for me, this is a confirmed break towards the downside of this daily level. Well, yesterday was actually the confirmed break towards the downside. And it doesn't look good for the traditional market either, which obviously is going to feed into the crypto markets as well. So now we are getting that confirmed break, that confirmed rejection from this daily level here, which, as you can see, major support, major resistance, major support. So it's going to act as a major support and resistance level, and a critical level that we need to be above to be bullish, and a very bad level, a very bad situation if we are below it. Now, because we are getting a negative reaction and we are below this level, it looks like we could come down to that $3,670 level, which obviously is going to feed into the crypto market as well. If we do come down to that level, we are going to see Bitcoin pull back as well, and most likely break towards the downside out of this daily support level here. Look at the 4-hour candles. 4 hours. What did you want me to have a look at the 4 hour? It's very volatile, I can tell you that, this 4-hour candle. Big wick towards the upside, big wick towards the downside. We could form some sort of candle formation here. I don't tend to trade off these candle formations, but there we go. Yeah, lots of volatility. Aikeshi, very well spotted there. Lots of volatility. So this was to be expected. I did actually, if I come over here and take a look at, where is it? I don't think I've got it saved. So let's just find it here. So I did post this one earlier on today. So this earlier on today just shows you what happened after we saw these after the Fed rate hike. And obviously we've had the 75 basis points now, and you can see lots and lots of volatility previously. So July, lots of volatility, June volatility, May volatility, and March volatility as well. So this is to be expected. And I'm not surprised that we are seeing a lot of volatility. Obviously, we're seeing a lot of volume as well. Taking a look at, let's have a look at the shorter time frame as well. Where is it? Here. So on the shorter time frame, the 1 hour, we're seeing a lot of volatility. Still looks like we're having that big negative reaction to this rate hike, which obviously is not good. So seeing the DXY push, which is bad for the traditional market and the crypto markets, we can see that reaction happening. As you can see here, traditional markets has got that confirmed break towards the downside, and we are continuing to push off of this Fed rate hike. We're seeing that in the crypto markets as well. And as you can see, we are now testing the very bottom of the major support on the weekly chart. So if we break below this, I've mentioned it multiple times, we break below this support level, there's a pretty high chance that we could come down to 12,000, because there's no support between that $12,000 level and that $19,000 level. When we've seen this previously, you can see we've just seen major moves between those sort of levels where there's no support at all. You can see it here as well, and you can see it between this range, this massive range here as well. The price just moves quite quickly towards the upside and towards the downside, and then once we break a major level, we come straight down to the next major level. So if we broke this major level, I would expect the price to come pretty quickly down to the next major level. Now, obviously, I've said it previously, that could take up to but maybe even between 2 to 10 weeks potentially. But what I mean by a quick move is, as you can see here, it just on the chart, it looks like a very quick move. I know this took, 3-5 weeks to get up there. So, yeah, time frame wise, it will take, a few weeks if we do get that break towards the downside, I do think. But looking on the chart, it will be a quick move. As you can see here, from this point to this point, it was a very quick and harsh move over the course of those 5 to 6 weeks here as well. So that's what I do expect. And yeah, it doesn't look too good that we're getting this negative reaction for our portfolios anyway. But for buying at cheaper prices, this is great. I don't really mind the price coming down. I know Ben has said this as well. I think this is personally for me, this is a good thing because I can buy cheaper. I never ever thought that I would be able to buy Bitcoin at even lower than 20,000 again. I never thought I'd be able to do that. And we're at 18,800 right now, and we have that opportunity. And right now, I have stopped dollar cost averaging. I am waiting to see if we can go lower. If we can go lower, 15,000, 14,000, and then down to that potential target of 12,000, then I am going to be dollar cost averaging down again. Once we do break these major levels here and get that reaction, I want to see a nice reaction to it, and then I'll start dollar cost averaging in again. But yeah, right now, it's looking likely that we are going to break towards the downside of this major support. Now, it's not confirmed. There is still a chance that we could hold this as support, but the likelihood of it is we are going to potentially break because we are getting this negative reaction to this rate hike. So not looking too good. And yeah, DXY is continuing to push, which obviously isn't too good. So I'm happy I can bring you this really quick update. It was a bit rushed. I'm sorry about that. But yeah, just some technical difficulties with a bunch of things. But yeah, managed to get that video out for you. If you did enjoy this, then please make sure you smash that like button, and I can continue to bring content to you as well. And I will see you in the next live. Ben is going live early tomorrow morning to update you with the fundamental side of this rate hike as well. So stay tuned for that, and I will see you tomorrow for the next live. Thank you very much for watching. Make sure you smash that like button.